I would want to start with an analysis from the Uganda Securities Exchange, and we have seen some noteworthy movements since our last analysis on Monday. But going straight into what exactly went down on the platform, we are looking at about a total of 41,867 shares, corresponding to a market value of 3,176,770, and that was what was traded. This is bringing us obviously to a market capitalization of about 20 trillion, and would want to see what listed equities brought us to this point.
Looking at some of the gross listings here on the exchange, as usual, we didn't see much movement on most of these. Most of the movements were witnessed on the domestic listings. Airtel Uganda notably had over 40,900 shares traded and closed at an all-time low of 76.50 Ugandan shillings. Airtel got listed in December last year, actually November, just to correct that. And since then, the company has been dropping in price. When you look at their IPO, Victor, they had about 100 shillings per share, and that moved to 47 shillings for retail investors later on after the extension of the IPO. And then upon listing, they went back to 100, which has been dropping, and currently they are standing at 76.50 Ugandan shillings per share. Well, Airtel Uganda wasn't alone. We had a couple of other participants. We had Bank of Baroda Uganda coming in with 900 shares traded and closing at 19 shillings. Now, Bank of Baroda was one of the top gainers with a 0.49 shillings gain. And then we had Umeme coming in with just 67 shares at exactly 459.07 shillings. Umeme still maintains one of the highest trading activity and also one of the highly priced stocks on the market as well.
Well, with such numbers, you'd want to understand how the market indices are performing in this particular situation. And as usual, we'd want to start with the all share index. And as of our previous trading session, we're looking at about 1.62, which is 0.16%, points to close at around 1,044.26, representing a one-week gain of 0.66%, a four-week loss of 1.5%, but an overall year-to-date gain of 19.69. Now, looking at other indices on the Uganda Securities Exchange, we have the local company index that also increased at by about 0.46% and reaching up to 264.97 points to close. This was making it a one-week gain of 0.05%, a four-week gain of 0.75%, and a year-to-date loss of 2.53%.
Yeah, Victor, to highlight on that performance there, the all share index has significantly improved when you look at it right now at above 1,000 points. Because formerly we had the local company index actually below 900. And if you know about market performance indicators, the local company, rather the all share index is a very big factor. It puts in play all the pricings and all the tradings that have been able to take place on these counters, and then we have an average. So the 1,000 points you're looking at is the kind of average pricing for almost all the stocks that are listed. So significantly noting is that when you have this all share index moving up, you're moving towards a very good direction for all the stocks in general. But the local company index still looks at only the local stocks. And among them, I can note, for example, Quality Chemicals last night gained at least 2 shillings. And that is from 53 to 55 shillings. A small movement, but significant in its own amount. When you look at the total shares outstanding at 3.65 billion, and the market capitalization of over 201 billion shillings, the company has been struggling to make up for the losses that shareholders have endured since listing. In 2018, when the company listed, it was worth over 265 shillings, and now with over 55 shillings per share. There are losses that have been suffered by most of the older shareholders, but we're seeing the company gaining, and slowly by slowly, we might see Cipla or Quality Chemical return to its feet once again. So I have to say, Victor, from my own perspective, the markets are not that bad, though the trading is still lacking. Looking at the volumes here, like you mentioned, the numbers are not as up as we would want them to be, especially around the second quarter when the financial year is ending. Remember also, most of the companies have just issued their financial statements. Dividends have been issued. So we would expect a lot of vibrancy in the market and people being enthusiastic, and it's not what we are getting.
What would be your overview on Airtel's performance? Like
Airtel. Now, Airtel has quite a lot to actually deal with at the moment. First of all, their financials were not looking very good. Comparing their performance with MTN, they had a net loss, and their net profits also, their net revenue rather, went down slightly. That they are saying that is owed to the increase in the number of taxes and also the operating costs of running the business. But on the other hand, their counterpart MTN seems to be doing well, and their pricing has been maintained at 170. Yes, they started at 200 shillings, but they haven't dropped as much in percentage as you can compare their performance with Airtel Uganda. Airtel also has suffered a few when you look at the dominance of this investor, NSSF, in the company, we don't see much enthusiasm as much as we see in MTN. Yes, NSSF has invested almost in all the stocks here, but the dominance it has on the Airtel stock is quite profound. And that could be one of the reasons why people are not trading it as much as possible. Remember, these institutions hold stock for a very long time, and they're not willing to let go. And that puts the retail investors or enthusiastic investors and shareholders in a very bad position, where they will not be able to find someone to sell or someone to buy from in case they want to.
So it is basically a problem of liquidity.
Perfect. Liquidity problem.
So shifting our focus to one of our major points of discussion as of today, would want to dive deeper into the reports from the Uganda Securities Exchange regarding market performance in 2024, and this is for the first quarter. So what do you have for us from that end?
Well, for the first quarter of 2024, which ended in March, the figures show that Umeme, or the electricity distributor of Uganda, came out with the dominance in the first quarter. And the total trading volume for the quarter was about 118 million shares, with a total turnover of over 23.9 billion Ugandan shillings. This quarter's turnover performance showed at least a 39.45% increase in the volume and as well as the turnover from 17.2 billion last year in 2023 to the current 23.9 billion. Umeme recorded the most activity as investors looked up took up positions on the counter given its implied value. The main movers on the index have been actually the NSE cross listings, with the catalyst being the 21.89% gain against the Ugandan shillings by the Kenyan shillings.
Now, focusing on the turnover performance per counter, Umeme counter dominated quarterly activity, accounting to about 88.09% of the total turnover, followed by MTN Uganda Limited with 6.75%. In third position was Bank of Baroda with 2.70%. And that was contribution on the month's turnover, as well as Stanbic Holdings Limited in the fourth position with 1.67%. And Airtel Uganda, along with National Insurance Corporation, Quality Chemicals Limited, DFCU Limited, New Vision Printing and Publishing Uganda Limited, and Uganda Clays Limited, traded over a total turnover of 0.8%. Now, the local company index also dropped slightly during this period, and we're looking at a commencement through the quarter that is at about 271.85, closing at about 267.25, and representing a 1.68% decrease. And the all-share index increased by 22.86% to 1,071.92 and 872.50 at the start of the month, representing the changing environment of these cross-listed stocks.
Absolutely. Like we mentioned from yesterday's performance, indices are very significant performance indicators. And here in the first quarter, we are seeing the local company index drop, right, which is a 1.68% decrease that you mentioned. However, the all-share index went up by over 22.86%. Now, the indices we are talking about are price-weighted, so they're depending on prices, all right? And when the prices go up, on average, the index moves up. And so why we are seeing this increase in the all-share index, I just wanted to put a disclaimer, is because the Kenyan shillings gained against the Ugandan shillings. And that means that all the cross listings, their pricings moved in a positive direction. And for that matter, that impacted the all-share index in the positive manner that we are seeing currently. But it's not that exciting. Because for me, I'm interested in the local index. Why? Because those are the companies that actually do the trading. When was the last time Victor you saw trading on equity? When was the last time you saw trading on, let's say, KCB Bank? Rare, right? Barely or scarcely. So you're not interested in these positive movements if they are not coming from liquidity point of view. From the liquidity perspective, we are still doing so badly, and there's a lot of room for improvement.
Well, we should also understand that it is very, very important to understand all these aspects and how they affect the trading of these securities and the performance of the companies as well. So it is also important for you to dive deeper into these companies' financial reports and understand what the company has to say in terms of its performance, any promises, any upcoming advancements, so you can know where you stand as an investor, whether there is need to let go of your security or withhold it for future hope.
Yeah. Well, when you look at Bank of Uganda, they produced a report as well in conjunction with the USE concerning the economic outlook for 2024 first quarter, and in its State of the Economy March 2024 issue, the Bank of Uganda highlighted that the global economy faces headwinds from geopolitical tensions, from tight financial conditions, as the central banks combat inflation and moderate the projected growth of 2.9% in 2024. However, growth is expected to pick up at least up to 3.1% in 2025 as inflation eases, and of course risks are tilted downwards from factors like escalating conflicts impacting supply chains and commodity prices. Now remember, these external factors do affect how investors do make decisions, because if an investor is able to access food and water easily and transport themselves, it means they have spare change. And that spare change, they can invest in the market. But if they don't, then they will even have to panic sell their stocks and be able to afford a living. But from this report, that shows that the economy will be growing very soon. Uganda's overall balance of payments remained resilient, with a projected surplus of about $300 million in June 2024, by June 2024. Supported by strong export growth and FDI inflows.
Now, more details on the figures and the complete analysis of this outlay can be found on the Uganda Securities Exchange website. If you need to dive to and get a better understanding of this statement. But from what we are seeing, economic growth for the financial year that we are in is forecast at 6%, underpinned by export performance and investment, And though outer year projections have been revised down to the 5.5 to 6.5% range, factoring in tighter monetary policy impacts. And private sector credit growth remains moderate at 7.7% amidst lower demand and supply. So while revenue collections have grown to about 12.4%, we're looking at a fiscal deficit that hit about 4,820 billion shillings. We're talking in trillions, and that was in the first 7 months due to the expenditure overruns and the lower than budgeted grants. And this rising debt service costs are actually straining revenues. So the Ugandan shilling depreciated about 5.1% annually against the US dollar in February of 2024, and impacted by investor outflows, seasonal demand, and hedging pressures, though the pace slowed down in March.
Upside risks to the inflation outlook include further currency depreciation. Currency depreciation is a very huge factor that has actually led to the markets going berserk. When you look at the Kenyan shillings, much as it was growing stronger than the Ugandan shillings, it was struggling against the US dollar, and so was the Ugandan shillings. And at one point, we actually had the Ugandan shillings against the US dollar at 3,988, and that was around the month of March, mid-March, which was a very tight spot for the shillings. However, the Bank of Uganda also noted that fuel and utilities have been a key contributor to the rise the rise in the economic activity in the country since August 2023, with a slight drop in Feb 2024. Now, crossing to the bond listings, when you look at the yields on government securities, there has been a slight improvement, and bond listings have also witnessed growth in the past one quarter. During the quarter, for example, there were reopens of the 2-year and 10-year treasury bond yield to maturity at 13.2% and at 15.5% respectively in January 2024. Now, the reopens for the 5-year and 15-year bonds with the yield to maturity of about 14.6 and 16.3% in Feb were also witnessed. Additionally, there was a private placement bond auction with a cutoff of a year to month of about 3 years, and that's about 14.25%. So, in the financial markets perspective, the bond yields have been up. Looking at the interest rates here, over the least bond we are having, the 2-year one, has 13%. That means if today I invested 100 million in this bond, I would expect at least 13 million every year, and at the end of the 2 years I would expect to get back my 100 million, which was a pretty good investment. What is your opinion on these government securities, and do you think Ugandans are going to be bending for these more than the stocks?
Ugandans are already bending for these, and the problem is not the public's response on this kind of report. The problem lying here is we are already dwelling in a debt-infested economy. Now, expecting that the government is going to optimize clearing a 1 billion bond as it has fallen due over every single thing that it has to spend on roads, health, and particularly all the other services, because obviously most of these public goods are not even provided to their fullest. Yeah. And in this case, we are looking at this money having to go into salaries of the people that are meant to put these things on table for Ugandans. So there's so many things at stake here that Ugandans are looking at, and obviously something like a long-term investment like this would be a perfect one, especially when you're in agreement with the government, but you are never sure that this bond will actually be bought at that particular time it was supposed to be bought. So we're looking at honesty, really, integrity in this case.
Yeah, absolutely. And that's it from the report. In summary, yes, bonds do well, yes, and government is looking at issuing more, but the stocks remain quite slow in Uganda. Now let's move across to Nairobi and have a look at what is currently happening at the busiest stock exchange in East Africa. Now Nairobi witnessed 48 of its 66 listings perform on the exchange yesterday, and about 21 gainers and 17 losers were witnessed. Samia Africa led the gainers with a 9.86% appreciation in price, and they closed at least 2.34 Kenyan shillings per share. They were followed by Standard Group, the East African Portland Cement, and Total Kenya on the top positions. On the losing side, however, we had East African Breweries Limited lose about 4.44% on their price, and then Ever Ready East Africa lose about 3.85%, and Umeme about 3.14%, whereas Safaricom came in with a top performance in terms of the volume. Safaricom led with a 2.38 million shares volume, followed by Cooperative Bank of Kenya with 486,000, and then Ken General with about 314,000, whereas Nation Media Group had about 308,900.
Diving straight into the performance of the indices on the Nairobi Securities Exchange, we are looking at the benchmark, which is the all-share index that pared 0.05, leaving us with a depreciation of 0.05%. Points to close at about 108, and this was representing a 1-week gain of 4.4%, a 4-week loss of 1.51%, but an overall year-to-date gain of 18.29%. And other remarkable indices that performed were the Nairobi Securities Exchange 10-share index that went up by 0.02%, and leaving us with a 1-week gain of 3.53%, as well as a year-to-date gain of 22.8%. Looking at the 20-share index, it went up by 0.31%, and leaving us with a 1-week gain of 1.11%, and a year-to-date gain of 11.59%. Shift also looking at the 25-share index, it also showed some good performance in our previous trading session, leaving us with 2.93% as in terms of 1-week gain, as well as a year-to-date gain of 19.31%, and an appreciation of 0.12%.
Absolutely. Still remaining with Kenya, when we move to Safaricom, the biggest trader for the day yesterday, they also maintained a dividend this year as their Ethiopia unit drags their profit. Now, Safaricom is a telecommunications company listed in Kenya and one of the biggest companies in East Africa. Safaricom maintained a 1.20 Kenyan shillings per share dividend, amounting to about a tune of about 48.08 billion shillings, despite a net profit for the financial year ended March 2024 falling 18.7% to 42.66 billion Kenyan shillings. Now, the telecom announced on Thursday that its board had recommended a final dividend of 0.65 Kenyan shillings per share, amounting to a tune of about 26.4 billion Kenyan shillings, to add to the 0.55 Kenyan shillings per share. That was the interim dividend, totaling to 22.04 billion for the February month.
Well, the 48.08 billion Kenyan shillings dividend is the same as the previous financial year, and when the telecom company actually paid 0.58 Kenyan shillings per share interim, the dividend followed by a final payout of 0.62 per share in Kenyan shillings. So Safaricom said the final dividend will be paid on or about August 31st, 2024 to the shareholders on the register of members as at the close of business on July 31st, 2024. And net profits from Safaricom Kenya actually grew 13% to about 84.74 billion Kenyan shillings, but 42.09 billion Kenyan shillings loss from Safaricom Ethiopia dragged the group's net earnings to 42.66 billion, actually, to mark the fourth consecutive year of a decline in the bottom line.
Absolutely, and for example, there's something with telecoms nowadays. They keep, changing names and trying to come up with new ways of doing business, and it has taken a toll on Safaricom. The Ethiopian unit has been absorbing a lot of revenue, and yes, it's up and running, but they're up against other Ethiopian telecoms, which is a very tough situation in business, right? You're in a new operating environment, and you need new clients. You need to sell your business. They need to get used to it, and that's what Safaricom has been going through. But with the dividends that have been issued, at least it gives hope to the shareholders that the company is still standing tall and resilient despite some of these losses. And that's it from us tonight. Thank you so much for having tuned in. Thank you for those that have been following on social media. Remember to also check us out on YouTube at Smart24 TV, and make sure you subscribe and like, and of course share. Good night, and my name is Anthony,
Together with Victor.
Thank you so much. Bye for now.
Smart 24